Welcome to the Treasury Update Podcast, Coffee Break Sessions, presented by Strategic Treasurer. The show where we cover foundational topics and core Treasury issues in about the same amount of time it takes you to drink your cup of coffee. I'll be your host, Jonathan, Media Production Specialist here at Strategic Treasurer, so sit back, relax, and enjoy the show. We are back with another coffee break session with Paul Galloway. Welcome back to the show, Paul.
Hey, thanks for having me again, John.
So what is automated financial reporting?
Automated financial reporting refers to the use of systems to generate financial reports on an automated basis. So I kind of just basically said automated financial reporting in that sentence. These systems provide audit trails, though, that can help with compliance, both from a regulatory and corporate policy standpoint. You're seeing that the use of automated financial reporting is becoming more important within organizations today.
Okay. And what tools in Treasury are commonly used for automated financial reporting?
Yeah, I'll just start from a finance perspective, because when you think about financial reporting, people will typically think of finance or accounting. So the use of accounting systems or ERP helps organizations generate financial reports. From a Treasury perspective, they can play a critical role within that process. The use of a Treasury management system, which can apply general ledger accounts to transactions that come in from banks and deliver files to the organization's ERP to complete accounting. It helps save time and helps with the financial reporting process. When you're reporting out of ERPs, you get more accurate information, so you have less chance of the human error of a manual entry of a GL account, which happens. It happens when you're doing manual stuff. But when you have a system that you can tag a GL account to, it's going to be the right GL account every time. They can also feed data and information to your automated reconciliation platform, your collection system, your receivables systems. So the use of automated financial reporting and getting data and information out of a TMS helps support financial reporting.
So is this similar to an API?
It's a little bit different than that, because when we think about automated financial reporting, it's a system that is told that you are to do this at this time, and this is exactly what you do. It sets the parameters, it sets the timing, the system recognizes that, it does what it's told. So in the case of financial reports, you generate a balance sheet, you generate cash flows, you generate income statement. It does that. Or it could be other reports that come out of systems. It can even come out of your TMS. What an API is, though, is it's that conduit or connection from, let's say, a TMS back to your ERP or reconciliation or receivables platform. So APIs are a connector so that two systems can talk to each other. So they are completely different in that respect.
Okay. So this automated financial reporting can actually do something with the connection that it sees, have an action versus just visibility.
Exactly.
Are we worried about accuracy, or is the data is generally it's good enough that we get trustworthy results?
That's a great question. So when you start eliminating manual processes, that's when you significantly reduce the chance or error, risk of error. So automation is a very good thing for organizations. And so when I think about the technology stack inside an organization that has an ERP, a reconciliation platform, a collections platform, and a TMS stacked on top of there, you got bank transactions going into TMS. TMS applies general ledger information. It sends the transactions to an ERP. It'll send transactions to reconciliation and receivables, and this stuff will match. And it will do its work that it's supposed to do. And it does it all on an automated basis. So the elimination of errors is significantly increased. The chance that you're going to have accurate information. That's the value proposition that these systems provide. Elimination of manual processes, increased efficiency, increased accuracy, because the data source is the source of truth. It's the transactions coming from the bank. That's source of truth. So all of a sudden now you have increased accuracy.
So from an accuracy side, it's much better. What about from a security or fraud side? Is there risks that come up?
Anytime you automate processes, you decrease the chance that there would be fraud or somebody stealing from the organization, either externally and internally. However, it doesn't completely eliminate it. So there are several things that organizations need to do. So they need to look at their people and their processes, ensure that they have right controls in place. So they have segregation of duties. They eliminate the chance that somebody within an organization is going to do something they don't want it to. Also helps eliminate the chance that somebody from the outside directs somebody either through a Zoom call with a deep fake or a business email compromise to do something that the organization shouldn't be doing. When it comes to the systems, you can put, kind of these belt and suspenders around them to ensure that you don't have the chance of the system being compromised. And the way you do this is through a couple things. One, you need to do an assessment of the technology. Is the organization keeping the systems up to date with software updates? Is there a restriction to access of the system? Do you have the right firewalls in place? All the normal things that you expect companies to do. The next thing that an organization needs to do is they need to do a penetration test to find out, can people not only get through my firewall, but get into systems, and not only get into the systems, but can they actually do something I don't want them to do? Get data, information that's sensitive in nature and send it out of the company, create a transaction, send money out to places that we don't want it to go. It's imperative that organizations look at these various aspects to ensure that security is tight and up to date. When it comes to any type of security and technology, you need to take these steps to identify weaknesses in access and controls, and then reduce the risk by shoring up those so that you don't have a possibility of somebody coming in and doing something you don't want them to do. And the thing is that this is ongoing. You have to train your people. You have to test your systems on a regular basis. And when you see fraudsters out there using technology against you, you need to be up to date and educate your people on what's going on. You got to keep ahead of them because they're advancing all the time. Treasury teams and finance teams, corporations need to be advancing it as well. And you want to stay ahead of them.
Are there regulations that help guide you, or it's kind of you just have to look at best practices?
I think about regulations tied to automated financial reporting. I think of, GAAP, generally accepted accounting principles, STAT, which is statutory accounting for insurance companies, or IFRS, which is International Financial Reporting Standards. These are all examples of regulatory requirements for financial reporting standards. So what you need to do is you need to ensure that your systems are up to date with what those standards are. So you can use these systems to help you with compliance in the sense that you tie it back to anything that would be artificial intelligence. Machine learning can help you ensure that you're keeping up with compliance of these regulations. Organizations continually have to keep up to date because they're changing all the time. They update things, they change things, they recategorize things. These systems can help you with that. As changes are made, the system can be utilized to help you with those changes.
And what are some of the biggest challenges in implementing automated financial reporting systems?
Well, like with anything like this, it's accuracy and integrity of the information that's presented. Anytime you have manual processes or poor internal controls or lack of data validation, that opens up the door for inaccuracy. What you do is you work to eliminate these manual processes. You ensure that you have proper controls in place and that the data is validated, meaning it's the source of truth, where it's coming from, where it's residing, the controls around locking that data down to the point that the only people that have access to that data is very limited, and access to the data in the sense that if it's coming from your TMS, which that data comes from your bank, that the data can't be changed. The other thing that you need to consider when it comes to automated financial reporting is the complexity of the organization, because that can have an impact on financial reporting. The more complex an organization is, the greater chance for error in financial reporting. But utilizing systems to help you with the financial reporting can reduce that risk.
That was a lot of good information. Thanks so much for sharing your thoughts today, Paul.
Thanks for having me again, John. Always enjoy the conversation.
Yeah, and to our listeners, remember to tune back every first and third Thursday of the month for another coffee break session.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.